The concept of a term conversion is very simple for myself, for you, maybe the other financial advisors you oversee, but to the general public, not so much. And it's only because they're not in this day in and day out like we are. The more you learn as an advisor, the more distant you actually become from the prospect or client. So to reground us and make a more memorable and elementary presentation, we're going to show you the client presentation for a term conversion using Cifico animations. Okay. This is the animation screen. How I got here, I just placed life insurance illustration files onto the client manager, pressed play, and all the information is transposed. This is the timeline. Age 35 is what we're starting with. That's the client's age. It goes all the way out to age 100. We can zoom out to see that a bit, but I'm going to keep this a little bit short and bring us right back into the term policy. So here's the term policy, this circle right here. It gets a name, 10-year term. Its first number and only number is the death benefit. That dictates the circumference of the circle. It has a dashed outline because no cash, no living benefit could grow inside. It would just leak out. So it's just the death benefit here. We can play these at whatever speed we want. I'll slow it down to start. Again, whatever makes sense for your conversation. Annual premiums go into the policy. And then down below, you're going to see a total, which isn't important on this animation. But now it gets pushed into the past, and now we've aged the client to age 36. So we can play this as fast or as slow as we'd like. I'm going to keep it on one speed for the time being. Maybe we're just casually talking with the client. Look, the premiums are level every single year. The death benefit is not changing every single year. That's level as well. So if we pause this at any point in time while you have the policy, we'll be able to tell how much death benefit would be paid to your heirs. So I'm going to pause this, and I'm going to move out to age 44, and I'm going to press play, and we're going to play this one slow. This is the last year this term policy will be around. This is the most important year, really. So they pay the premiums, end of year, the contract is gone. So now if we press pause, we can see how much death benefit would go to this person's heirs, and that would be nothing. So let's reset this animation. Now we want to talk about what is the term conversion. So maybe they have this policy. Okay, $1 million in term. We want to convert some of that term. So instead of just $1 million in one circle, here's the next animation. Now we have the same amount of death benefit, 600,000 and 400,000 equals $1 million in two different circles. So we went from this 1 million in one circle to $1 million in death benefit in two circles. And we've converted, or suggesting conversion for 400,000 in whole life. And you could tell your client, you don't have to take another medical for this. You don't have to do any underwriting. You just sort of do paperwork. So, and we can do this as much as we want until the term runs out. So we can keep spawning off more policies like this. Let's press play. We'll keep it slow to start. Okay, up here, down here, you could see it's now $330 because we're supporting only 600,000 in term, not $1 million. The client knows what's going to happen to this dashed outline circle, this term policy here. They know what's coming down the road. It's 7,000 for 400,000 in whole life, and we'll get into why that is. We'll press pause. What we're noticing here are the growth figures. The death benefit right here, first number always dictates the circumference of the circle, is going to go up by $388, and the cash value, which is about to be born, will grow by $5,900. So let's press play, let those growth figures sink back into the life insurance policy. They're the updated running total. So we'll do this one more time at a slow speed. You have your premiums going in, and here you can see where your totals make more sense now, because now this is sort of a portfolio. 7,000 goes in, now the cash is increasing by 6,200. And you can see that happening. Death benefit and cash value. The death benefits are the circumference of the circles. The cash will be blue that grows inside. We'll see that very soon. I'm going to skip out here just for a moment to age 44. So here we're at age 40, 41, 42, 43. Here we are at age 44. Okay, so this has a death benefit of 420,000, so it's grown from the 400,000. And this has some cash of 56,000, the blue looking to fill up that death benefit circle. So that's what we mean by the cash value being visualized. So I'm going to play this year slow and fast and then slow because we know what's going to happen on this year. Wow, we put 7,000 into that policy, the cash grew by 8,600, and this 600,000 in term, if we did not convert that along the way, will expire just like the million did. So we really want to bring as much to this side of the ledger as possible. And now I'm going to play this a little bit fast just for the time being. So I'll keep it at 3 times speed, right? We're just looking at some of the growth numbers. So this is the death benefits. This is the circumference of the circle, getting bigger pixel by pixel. Started with 400,000, now it's nearing 500. Here's the cash value, the blue growing inside the policy, looking to fill up that death benefit circle, looking to create and animate an endowment contract. So you can kind of geek out about this with your client. Remember, you can control these animations to contour to your conversation. 7,000 goes in, cash grows by 17,000. 7,000 goes in, cash grows by 18,000. So they see some nice positive movement. I'm going to pause this here. I'm going to move out to age 64. This is the last year that this policy will accept premiums. So at age 64, you put 7,000 into this converted policy. The cash is going to grow by 25,000. So that's 4 times, which is nice. There's the nice increase. You can tell them about the tax-free death benefit, the tax-free cash value, all the different things you can do about it. And going forward, there are no more premiums being paid into the policy. So now it's just growing on its own. You just have this cash cow that you've fed enough so that it's self-sustaining, growing on its own. I'm going to pause this again, skip out to age 70, and I'm going to play this slow to start. And I'm going to show them, at age 70, you could start to take distributions. You could take them whenever you want, but this is just an example. So let's press play. Now the death benefit and cash value are red. They're going down by that much in that year, because the trade-off is we're taking a distribution of $25,000. So you can show distributions. Whatever illustration you put in, whatever action's going on in that life insurance policy, it'll be transposed and reflected here. So we can play this a little bit faster. Again, now they're seeing this, right? We can kind of speed view it. We can zoom out a little bit and say, whatever else you have going on, this has all these different benefits. And if you want to utilize it for income, you can. From age 70 to age 100, we don't have to follow that exact schedule. This is just an example. It's providing $25,000 a year for you. You can open up the stats card over here and you can talk about, hey, we've put $210,000 in, we've taken $350,000 and growing in distributions, and they're tax-free. All sorts of cool things you could do when you check in with the stats card. Now, we're just going to spend a little more time on this animation. And the reason why is I want to show you a more concise way to present this rather than speeding it up and slowing it down. That's important too, at least on your initial meetings with a client. We can go in here. We can just play the years that we want. Oops, sorry about that. Let me just come over here and grab these. Cut and paste the wrong thing. There we go. Now we have just the years that we want. And now we're just going to talk through very simply, in a very sort of brevity way, this policy. We're going to tour this policy. So let's start. We're starting at 37. At age 37, you had this policy for a few years. You put 7,000 in. Cash grows by 6,200. Not the greatest year if you're hyper-focused on cash value. Now at age 40, it skipped to age 40. 7,000 went in. Cash grew by 7,100. Now the cash is increasing by more than the annual premium. At age 51, the term insurance is gone. 7,000 goes in. The cash has increased by 14,000. It's now doubling. At age 60, 7,000 goes into this policy. And now the cash has tripled. It's grown by 21,000. And at age 65, no more premiums are made payable to this policy. And at age 70, you saw the rest. There are some distributions. But it's right here where I want to pause things. Right here at age 70, right? Now we bring in the third and last Cifico animation for this. And we say, okay, you understand how the conversion works. You understand what you can do with it in terms of distributions and the pay schedule. But I have another animation set up. The same policy that we just saw, I have it all marked up here to age 70. And what I'm going to do is simply say, this is the same policy you saw distributing. And this is if you took that same policy and didn't take any distributions, it would just build for legacy. So you're going to watch this death benefit and cash value grow. And you're going to watch this death benefit and cash value of the same policy, 2 different ways, contract. But the reward is you're taking money from it. So we'll press play on this. I'm just going to play these at 2 times the speed. So this is if you took the path with the same policy of making those distributions, and this is if you just kind of let it grow. Maybe they have some estate tax concerns or legacy concerns, but you could do something in between this. It's showing the versatility. If you notice, I did this entire video in one take. It's not because I'm a great speaker. It's because these animations lend themselves to storytelling, and if you ladder the animations like I did, you can have a really great presentation. Maybe this is something you want to try out for your practice or show to your reps, because this is something that keeps the presentation very simple and very engaging, and it really helps spread the message to your client in a clear way, and it's probably more of an incentive for them to spread this experience to others because it's very different than the traditional spreadsheet or flowchart that they're normally seeing. This is a bit more interactive and a bit more alive. Anyway, if you have any questions, you can always catch me on LinkedIn. Good luck at your next meeting.